Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Apple report for Wednesday, May 17th, 2023. Before we click through all the charts, I want to encourage you to please click like if you haven't already. It helps us out a great deal in being found on YouTube. And also become a Wicked Stocks YouTube channel subscriber. You'll be provided notification each and every time new content has been uploaded. That includes the daily Apple and daily Tesla report, as well as an occasional stock pick. Anyway, here we are, Daily Apple Report, Wednesday, May 17th. Let's jump right to the big picture and remind you, as if you needed it, that we are still in the midst of a long-term buy signal that occurred a few weeks ago above the 171.02 channel top. On the daily chart, that comes in at 170.75. So it is a range that can absorb selling through the rest of the year, and above which the 182.94 January 22 all-time high remains a 3 to 5 week objective, and the 218.37 long-term channel top is the longer-term objective that I think will be reached over the next full year or sooner. And that is the big picture. If we were to fall back by, say, on Friday and close at 169.31 or lower, which is a 1% violation to the downside of 171.02, that would be considered a failed long-term buy signal, which would be considered, in essence, a valid sign of weakness as we move into June trade and maybe even July, August. And under that scenario, I'm looking for the chart right now. I'm going to go to this one. Under the scenario of a failed long-term buy signal by closing at 169.31 or lower, 167.36 is likely just the next day where we could actually bottom out through the rest of the week. So if that happens today, Wednesday, we could. Here's the thing. It is the week-by-week settlement that I really go by. Now, the daily settlement at 169.31, if you're long from the low 170s, and you're nervous about getting out, you don't have a strong argument from me just for safekeeping. But it really is the Friday end of the week settlement, if at 169.31 or lower, should yield this 158.13 formation within 2 to 3 weeks. And there's another one that comes up here in the 140s, the upper 140s, that I would consider kind of a 2-month target, say by the end of July or sooner, if we were to close the week back below 171.02 by a 1% margin of 169.31. So I think I covered the downside pretty well. Until then, this is bottom picking territory, not only for the day, not only for the week, not only through June, but even through the rest of the year, anticipating higher trade. So let's talk about the day itself. We are in such a consolidated framework right now that, I need to be, let's see, here we are, 174.78. I just have it as a minor point. It is a pivot point though. So I don't know if we'll see it today at 174.78. Now 174.06, 73.21, 72.57, 71.60. They are all legitimate, real levels that are tradable. If we push through 73.21, I can tell you that is Monday's high. If we push through Monday's high, and we came close to testing it actually on Tuesday, 173.13. If we push through Monday's high of 173.21, we could test this 174.78 intraday. That may be it for the day. But I don't like to encourage aggressive selling at this point when it's really the 176.45 formation that I think is the sort of short sell zone, short sell level as we move, and not only just for the day, but perhaps even into later weeks. So if we push through 174.78, 176.45 is in reach today, where we can place a daily high and possibly fall off from there into the later week, possibly back into the low 170s again. It would be a settlement above 176.45 that would set off a secondary buy signal that should within 2 to 3 days yield 180.76. 180.76 is a longer term channel top. It's a 2-star resistance that over the next few days, as we get closer and closer to converging with 182.94, the January 22 all-time high, I'm just going to call it one range of resistance between 180.76 and 182.94. That'll be 3 stars that can absorb buying through next week on a weekly basis. 182.94 is once again the all-time high, and we may well top out there for more than a week, possibly a month, and then fall back to 171.02 within several weeks of doing so. That's why I give the 218.37 objective a full year to play out, but it could be sooner. We accomplished a similar amount in about 6 months from the January low to the recent highs, a little less than 6 months. So I call this, and I have called it, a 5 to 8 month target at 218.37, but it could certainly spill into a full year or so if we double top at 182.94 for an extended period of time. But even that, falling off of 182.94, I would consider 171.02 to be prime long entry material on a longer term basis through the rest of the year. Not unless we close back below here by a 1% margin at the end of a week do I think the big picture then turns negative. And by that, I mean midterm, not long term. I'm not expecting a complete longer term sell off. What I would expect, once again, would be the 158.13 formation by the end of June or sooner. And there's other structures coming up in the upper 140s that I think by the end of July or so. If we close below 171.02 by a 1% margin. I think I pretty much wrapped it up for just about all there is to say today. I'm going to leave it at that for Wednesday's Apple Report. I'll be back tomorrow with Thursdays. Please click like, subscribe, and check out wickedstocks.com.